Nearly $1.5 billion in market value has been lost by Frontier in less than 2 years. This is hot on the heels of a 40% drop in share price overnight. So today's drop in share value appears to be market reaction to Frontier's recent trading update released just this morning. According to the website companiesmarketcap.com, this massive drop in share value puts the Frontier Developments market cap at just $280 million. This compares very unfavourably to $1.77 billion back in April of 2021. Of course, there's a whole load of different factors going into this, and that's what we're going to look at right now. Generally speaking then, there's two separate elements going into all of this. The first is Frontier themselves, the second is the situation with the market and the world economy. So we're going to look at both of these issues separately. First, we'll look at Frontier. So today's trading update and notice of results was posted at 7 AM this morning. It goes into a bunch of details on Frontier's current financial position. Generally speaking, it seems that Frontier are doing pretty well financially. They're making quite a bit of money and have plenty of cash on hand. In fact, they say they have a cash balance sheet of $42.6 million as of the 30th of November 2022. So whilst Frontier are making pretty decent money and they've got plenty of money in the bank, what seems to be the problem? Well, the problems are multifaceted and numerous-fold. It starts with F1 Manager 2022. This, of course, is a major series for Frontier. Major boon, of course, getting a hold of this contract from F1 to start with. It needed to be a massive success for the company and they needed to ride high on the tide. After all, this is going to now become an annual series, F1 Manager 2023, 2024, and so on. It really does need to be a big deal for them. So in their trading report, they said player engagement at release in August 2022 and during the initial period after release was strong and broadly in line with original expectations. Unfortunately, sales performance during key holiday season price promotions fell materially below original expectations, potentially due in part to increased player price sensitivity related to worsening economic conditions. So that part does read into the bit we get into in the video a little bit later on about the worldwide economic conditions and the economic conditions in the UK. But what it doesn't touch on is the quality of support from Frontier on F1 Manager 2022 and the confusion that has gone into that through the community and for the community, as well as the fact as to the quality of the game, perhaps not quite as high as some people would have hoped or some people would have expected. Now, although Frontier say that potentially in part the problems, the low sales, is due to increased player price sensitivity, it's clearly they feel that that isn't the sole reason. They go on to say that as a result of underperformance of F1 Manager 2022, the board has reduced its revenue projection for financial years 23 and financial years 24. Now, there's a very specific reason that this particular part stands out to me. And it's because it seems, at least to me, my interpretation of this would be that it's factoring the potential drop in revenue, expected revenue, via F1 Manager 2023. After all, financial year 23 would include F1 Manager 2022, but financial year 24 would probably be including F1 Manager 2023. So it seems likely Frontier revising their expectations of this whole franchise down somewhat. Naturally, the question is very much, is this due to economic hardship, economic crisis? Certainly, people are having financial troubles at the moment. They can't afford to buy as many games or luxury items as they once could. Yet conversely, we live in a time where games such as God of War Ragnarok are selling 5 million copies in just a single week. Whilst, yes, of course, God of War comes from a truly massive studio, nonetheless, it is a game priced at £70. And yes, I know that I'm comparing apples to oranges here. What I'm doing is illustrating that despite player sensitivity to pricing, players are still purchasing these highly priced games and doing so in bulk. After all, quality is and always will be a major factor in whether or not players part with their money. Now, moving on, Frontier talk about their existing portfolio. The performance of Frontier's existing internally developed games, which released before June 2022, namely Elite Dangerous, Planet Coaster, Jurassic World Evolution 1, Jurassic World Evolution 2 and Planet Zoo, was in line with expectations during the first half of financial year 2023. However, sales performance during key price promotions in December 22 fell below expectations, with some evidence of increased player price sensitivity. So there's that phrase again, and yes, I do believe it certainly plays a part. After all, how could it not? They go on to say that, as expected, the strongest performers from our current existing portfolio in the financial year to date have been Jurassic World Evolution 2 and Planet Zoo, which continue to be supported with free updates and multiple paid DLC. Now, another sticking point for Frontier is Frontier Foundry. Frontier Foundry is Frontier's new label for publishing third-party games. These are games such as Warhammer 40,000, Chaos Gate, and Stranded: Alien Dawn, not to mention the upcoming Deliver Us Mars. Now, when it comes to Foundry itself, it seems Frontier, at least from my interpretation of this, don't paint a very flattering picture when it comes to revenue from Foundry. Specifically, Frontier say, Foundry has supported 8 different games to date, with 6 released games and 2 titles launching in the next few months. Given our mixed experience of third-party publishing in terms of financial success to date, we are assessing our strategy for Foundry in light of such experiences and competitive trends in the market. In particular, we are reviewing the return on investment achieved by Foundry. They say, whilst we remain committed to and excited by the titles currently in development for the release in financial year 23, we currently do not have any Foundry titles scheduled for release in 24. Now, this is really an ominous paragraph to close on there. My personal interpretation is that Frontier are not too happy with the way Foundry has panned out over the past few years, and this could be preparing investors for Frontier closing Foundry down, or at least severely limiting it. Again, pure speculation there. I'm not saying that is the way things are, but that would be the way I personally would read that paragraph. Now, perhaps the real contention for all of this, for the market, for investors, is the revised down of revenue performance from 114 million predicted down to 100 million. That's a massive drop. Now, this isn't the first time that Frontier have revised their potential earnings down, the potential revenue downwards. They've done this numerous times in the past. Off the top of my head, I think it's at least 2 or 3 times in the past they have done this previously. So when you're an investor sitting there investing in Frontier, and each year, each 6 months, they continuously appear to revise their revenue downwards, at least that's how it seems, well, that's not a good look, is it? And I think, well, the investors get a bit jittery. So here we are. It turns out that Frontier are in a position where they're making a decent amount of money each year. They're in a position where they've got plenty of cash on hand. But their games continuously underperform. Their new releases underperform. Keep in mind, Odyssey underperformed. Jurassic World Evolution 2 also underperformed. All of this according to Frontier directly. You can find this information in their financial reports. And now F1 Manager 2022 has also underperformed. Now, if I was an investor in Frontier, or if I was working at a high-level job within Frontier, at some point I would look at this and start thinking, well, damn, maybe this is us. Maybe this isn't just market reaction to unfavorable market conditions, but maybe, just possibly, we are doing something wrong. As a player, me personally, I feel Frontier tend to not support their games in the most optimal way. Sure, they do provide ongoing support for their games, they do release updates and DLC, but it's not anywhere near comparable to other live service titles. Frontier have a long way to go. Although, of course, they have learnt dramatically, have improved dramatically, specifically in 2022 with Elite Dangerous. The wonderful community team there has done awesome work, and there's been a bunch of really nice updates. But really, Frontier have a long way to go. This is just a start. Frontier need to not only maintain the pace they've had with Elite Dangerous in 22, but also improve upon it. They then also need to ensure that same level of support is available for every single one of their titles. Unfortunately, there's a comment I see out there a lot on the internet. I see this on the forums, on Reddit, and YouTube comments, and it's stuff I hear from people I personally talk to. They feel that Frontier tend to focus on the next title far too often and move on away from existing titles. They don't show enough support for existing titles, instead keep releasing new titles. And it's very much a theme that I personally agree with. I think Frontier could do much better with focusing on a lot heavier on their existing titles rather than keep focusing in on new releases. It seems though Frontier do not agree. Johnny Watts, Frontier's CEO, had this to say: "It is very disappointing to be resetting our financial expectations. As CEO, I am driving a change in emphasis to increase focus on our core strengths and skills, with particular attention to increasing the return on investment that we achieve from our world-class teams. We intend to grow the number of our development teams to increase the cadence of new releases, whilst continuing to nurture our existing portfolio to achieve sustainable growth." So basically, in short, Frontier want to go ahead and release even more titles than they are currently releasing, because yes, that is working out well for them so far. But either way, I'm not a businessman, I'm not an investor, I'm certainly not on the board within Frontier, so from the outside it's very, very hard to judge. But all we can see is the way that the market is judging Frontier, and unfortunately it doesn't seem to be too good. The truth of the matter is that many of us do have a lot of faith in Frontier's games. Many of us really do love Frontier's games, whether you're a big fan of F1 Manager, whether you love the Planet Zoo games, or whether you're a huge fan of Elite Dangerous. We've all been here for a very long time, and we're sticking with it for the long run. Hopefully Frontier are able to do the same and stick with all their existing portfolio for the long run, and continue to show the fantastic support they have showed for Elite Dangerous in 22, and continue to do that not only for Elite, but also for their other games. Now, I mentioned earlier on in the video that there are, of course, other factors involved in what's going on here. There are some other economic issues. This is economic downturn. It's happening worldwide. It's affecting directly many people. Here in the UK, we've got the energy crisis to deal with, increasing food prices, mortgage rates going through the roof, and a whole host of other problems that really are causing financial hardship. And I think most of us have either experienced this directly or are very close to people who have experienced it, and it's not a pleasant situation, not by any means. So it'd really be completely wrong of me to say that market conditions are not having an impact on this. Obviously they are, and obviously they are having an effect not just on Frontier, but also on other companies as well. Now, as I'm talking, you can see the share price charts for some other big companies out there. Mostly I've tried to focus on game studios out here to keep an equivalence. The initial charts you'll see are from UK-based studios, but there's not a whole lot of big UK-based studios, but we've included a few in here. We've also got some other worldwide companies as well. Now, one thing you'll notice is that many of them, although not all, do have a common trend. And that common trend is they often saw a share price boost in 2020 and 2021, and then a bit of a drop-off, or quite a big drop-off, thereafter. Obviously, those share prices were boosted by the pandemic in those years. A lot of players stuck at home ended up playing games, and the revenue did drive upwards. A lot of companies benefited from that. That then dropped off as players ended up returning to work and other busy parts of life. Then, as we got into the later parts of 22, the financial crisis really did start to hit, and some companies have taken another hit on their share prices here as well. But at this point I really do want to point out that it seems none of them have had the same impact, or felt the same impact that Frontier Developments have had. So while some of them certainly have seen share price drops after the pandemic and during the financial crisis, that may not be true for all of them, but some of them have seen that, they certainly haven't seen the massive market cap value drops that Frontier have seen. So I think something different is going on with Frontier. Yes, they are affected by player sensitivity to pricing, no doubt about that, but there's other factors at play here too. And let's not forget the other side of it. There are plenty of players out there, again, who are having financial trouble, and buying a game is the last thing on their mind. So, like I say, that does have an impact, but conversely, there are plenty of players out there who still are purchasing games, and their testament to this is the aforementioned Sounds of God of War. 5 million copies of a £70 game sold in just a week. The recent Pokemon game also sold many millions of copies, and let's not forget Call of Duty as well. Now, I'm not for one moment equating these titles with Frontier. These are behemoth titles. They're massive titles that are expected to sell lots of copies. But the fact is, they did sell record-breaking copies. and that amidst the financial crisis at the same time when these titles are priced higher than ever before. So yes, player sensitivity, at least within the games industry, is certainly having a negative impact, but for some titles at least, it's not the be-all and end-all. Now, whether you're a massive fan of Frontier and fully support them in everything they do, or whether you're a bit of a jaded gamer and always like pulling them apart, or whether you're a bit like me and have a middle-of-the-road opinion, I think we can all agree that Frontier from time to time, or perhaps really a bit more often than they should, do make bad decisions. And it's just a natural question to, as a player, start speculating and wondering if perhaps whether or not those bad decisions have had an impact on their company overall. Is it all coming back to bite them in the butt? Unfortunately, there's no easy answer to any of that, and certainly not for us on the outside with very little in the way of detailed information. But like I said, all we can really go on is what we experience as a player and what we see as market reaction. And sometimes that just doesn't look ideal, does it? At any rate, do let me know your thoughts and feelings on all of this in the comment section below. I'd love to hear from you. As always, thanks for watching, and I'll catch you guys and girls next time.